Something real is happening in the AI agent economy. The ACP network, that's the Agent Compute Protocol where AI agents compete to provide services, just crossed $100,000 in total revenue with over 130,000 jobs executed. AIXBT ranks third among all agents on that leaderboard. But the token itself sits at 8 cents, down 67% from its May high, trapped under a descending trend line that's rejected price 3 times since summer. Here's what changed. Heikinashi RSI just printed its second consecutive green candle from oversold territory, and the token ranked third on LunarCrush's alt rank by social momentum. Volume profile shows a point of control at 17 cents, more than double current price. So the question isn't whether the AI agent economy has legs. The ACP network data proves it does. The question is whether AIXBT's position in this ecosystem offers asymmetric risk-reward at these levels. I'm going to break down exactly why I'm watching this, what the chart tells us, and where my load zone sits. AIXBT trades at 8 cents after spending October consolidating between 7 cents support and 10 cents resistance. The token is down 13% over the past week, but zoom out to the weekly chart and you'll see something more important. It's holding above the October low of 5 cents, which marked the bottom after that early October liquidation event that wiped out leveraged positions across crypto. The broader market has been choppy, but AI agent narratives are heating up. We're seeing institutional interest in autonomous finance protocols, and AIXBT sits right at that intersection of narrative and infrastructure. It's not just another AI token throwing around buzzwords, it's actively processing market intelligence through its terminal, aggregating on-chain data and social sentiment in real time. This matters because we're at a point where agent economies need to prove revenue models work. AIXBT is showing those numbers within a competitive ecosystem. The timing feels deliberate, consolidation after a flush, fundamentals improving, and technical indicators starting to turn. That combination doesn't guarantee a breakout, but it creates the conditions where one becomes possible. 3 major developments converged in the past 2 weeks that separate AIXBT from speculative AI plays. First, the ACP network metrics went live showing concrete proof of concept. To understand this, think of ACP as a marketplace where AI agents compete to provide services, whether that's market intelligence, data analysis, or trading insights. The entire network has generated $107,000 in total revenue, $74,000 in earnings, and nearly $50,000 in USDC earnings across all participating agents. These are executed jobs, confirmed on-chain, with 129,000 total jobs processed across the network. Within this competitive ecosystem, AIXBT has established itself as a top-tier performer, ranking third on the ACP leaderboard with over $4,700 in total revenue from 4,900 successful jobs at a 64% success rate. AIXBT's significantly higher job count of nearly 5,000 demonstrates something critical: consistent, repeatable demand for its market intelligence services. It's not just one-off large contracts, it's steady utilization. This validates the core thesis. The agent economy is not just theoretical, and AIXBT is actively generating revenue within it. The token now ranks as the second largest virtual AI agent on Base with a $74 million market cap, only behind Tiber's $340 million. This market positioning reflects both the token's role as the native asset of the AIXBT agent and the broader narrative around AI-driven market intelligence. When you look at the DeFi plus AI landscape, OCT Gems infographic positions AIXBT perfectly in the retail automation quadrant with high agent intelligence and market approach. It's described as a market narrative intelligence hub, competing with projects like CGPT's full-stack AI platform. The difference is AIXBT focuses on what crypto traders actually need, finding narrative shifts before the market catches on. Its X account posts showed this in action recently, dissecting Aerodrome's deflationary model and base sequencer revenue metrics that most traders miss. The token serves as the gatekeeper. Access to the AIX terminal requires token-gated staking of at least 600,000 AIXBT tokens, creating natural by pressure as more retail and alpha groups adopt the platform. Third, LunarCrush AltRank placed AIXBT at number 3 out of the top 10 coins, behind only Zcash and Velvet. AltRank combines price performance relative to Bitcoin with social activity indicators, meaning AIXBT isn't just moving. People are talking about it, and attention is building. The architecture is what makes this interesting. The AIX terminal aggregates on-chain data, X sentiment, and exchange activity, running machine learning models that map narrative velocity and trader behavior in real time. Early institutional pilots are testing these social risk dashboards, which suggests the product has legs beyond retail speculation. The fact that AIXBT is generating real revenue within the ACP network, while the token holds a $74 million market cap, creates an interesting dynamic. You're not just buying exposure to a narrative, you're buying into an agent that's actively earning within a growing ecosystem. This fundamental backdrop matters because strong narratives need strong products underneath them. Looking at the weekly time frame, AIXBT printed its most recent candle at 8 cents, sitting between immediate support at 7 cents and that stubborn resistance at 10 cents. Price remains below both the 10-week and 21-week exponential moving averages, marked as blue lines on the chart. This tells us the intermediate trend is still bearish by conventional indicators. More importantly, there's a descending trend line drawn from the May high of 24 cents that's acted as a ceiling 3 times, rejected in July, again in September, and most recently in October. Until price breaks above that trend line with conviction, any rally remains a lower high within a downtrend structure. The Fibonacci retracement gives us key levels for planning. I anchored mine from the May top of 24 cents, down to the October low of 5 cents. The 618 retracement sits at 17 cents. This is critical because it aligns with volume profile's point of control. When multiple technical factors converge at one price, that level acts as a magnet. The 1618 extension projects to 36 cents, and from there we're looking at 55 and eventually 80 cents if this thesis plays out over a longer cycle. But first, price needs to reclaim 17 cents. On indicators, Heikinashi RSI just bounced from oversold territory and printed a second consecutive green candle. For those unfamiliar, Heikinashi smooths price action to filter noise. It's especially useful on weekly charts for confirming momentum shifts. 2 green candles after oversold readings often signal exhaustion of selling pressure. It's not a buy signal by itself, but it's a warning that conditions are shifting. Volume profile analysis shows the point of control at 17 cents, meaning that's where the most trading activity occurred historically. Think of it as a psychological level where both bulls and bears have strong memories. It'll either act as resistance if we approach from below, or support if we reclaim it. For my personal strategy, my load zone sits between 6 and 10 cents. We're currently in that range, which is why I'm building a position gradually, rather than going all in at once. My stop loss is clear. A weekly candle close below 5 cents invalidates the setup for short-term trades. If that happens, I would hold a small bag for the long-term narrative, but would look to reaccumulate around 3 cents if we get that deep of a flush. Take profit targets are layered. I'm trimming 30% at 17 cents, then letting the rest run with targets at 24, 36, 55, and 80 cents. This is not financial advice. It's just how I'm structuring risk-reward based on what the chart shows me. Synthesizing fundamentals with technicals, AIXBT presents an asymmetric setup where downside is somewhat protected by October lows, and upside targets offer 2x to 10x depending on the time frame. Best case, we reclaim 17 cents and flip the descending trend line into support. That opens the door to 36 cents over the next few months. Worst case, we lose 5 cents and reset to 3 cents, which would give me a better entry for the longer-term agent economy narrative. The timeline matters here. Short-term traders should respect that descending trend line and not get chopped out by failed breakout attempts. Long-term holders can afford to be more patient given the fundamental developments in agent revenue within ACP. What would change my thesis? If ranking on the ACP leaderboard starts declining, or if the token loses the 5 cents level on strong volume, I would step aside and wait for better structure. The agent economy is not theory anymore. It's processing real revenue with real jobs, and AIXBT ranks third in that competitive environment. If you found this breakdown useful, hit that like button. Join my free Telegram group for daily updates on setups like this. Link is in the pinned comment below. I've also covered other AI infrastructure plays recently, so check those videos on screen if you want more data-driven analysis. Stay sharp, manage your risk, and remember, the best entries come when you're patient enough to wait for your price.